What is going on? Welcome back. Okay, welcome back to Financial Journey, everyone. We got a fun show ahead of us. Q1 earnings. So it is slated to start in 14 minutes, and ultimately I'll mute myself during that time period, and then we can kind of go over just close notes, kick it a little bit. It is down 7.54%. So I've been going through this document. So they submitted everything already. So earnings per share estimate was negative 25 cents, came in at negative 30. And then revenue, they did miss on revenue. So 182 versus the forecast of, I believe, what it came in at 175, I believe. I'll find that. Or actually right here it shows that. So 172.7. So yeah, kind of a double miss. We'll just have to wait and see what does come out from their future guidance. But essentially, I don't know. Like I've said, the market might forgive the metrics, the misses. Although if they don't give good guidance, then definitely it's going to be a little bit of an interesting show, because earnings per share was worse off. And if you kind of look at their G&A, very high. I did circle this, even compared to the previous quarter, like abnormally high. And I don't really know what that could have been derived from, unless it was maybe investment into Gravity, a lot of hiring and maybe marketing like that. One thing to note though, they actually did bring up Gravity. It's like pulling teeth a little bit with them. But it does say within here, I'll kind of make this a little bit bigger. Ultimately, it looks like they might not be using the Gravity. So we may lose our trademark, or unable to submit specimens before the deadline. So I don't know. Reading this, they better come out with something very, very positive about this, because I feel like this kind of still is ambiguous. I don't get the warm, fuzzy feeling by reading this that they're going to launch a Gravity. Unless they change the name, that's a very real possibility. But by reading this, still is kind of up in the air a little bit. As far as this right here, though, these are the questions that's going to be posed to management from retail. So ultimately, nothing really changed there. So you have that profitability question, stock performance, obviously not necessarily been the best. So we'll see what Peter has to say about that. This question I'm kind of optimistic about, but yeah, I think no matter what, it comes down to Peter, right? And they did use a change of wording. So on this original PR, the announcement, so they go over how they actually did, for the first time ever, deliver more than they produced. So you can kind of see that they've been knocking off the inventory, which is a very positive thing. You can kind of see that right up here. So inventory dropped dramatically from the previous quarter, so that's good. They had a very big sale. I think it was February 14th-ish. So clearly that shows that the market wants a lower price vehicle. But beside the point, so it talks on that 1 billion issuance, preferred shares, and a quarter. I hate how they always do this. Total liquidity. It's like they're trying to make it seem like better than what it is. I just look at this. Only cash and cash equivalents. That's the realistic viewpoint. So 2.1 billion. They burnt through roughly about 700 million in this quarter, to be exact. Where is it? Oh, 729. So 729. So logically, yeah, they do have sufficient amount of cash with the integration from the PIF, or the affiliate from the PIF, probably up until now Q1. So they might not be diluting. Probably, if anything, they'd need another round of funding beginning of Q4, maybe late Q3. So that's somewhat optimistic, but honestly, it'll just come down to what Peter says. I'll go through this. It's 104 pages. Just actually started to go through this, and yeah. I was very interested, when this started to spike up out of randomness, shorts were the cause of this. So in the end, shorts did return 1.24 million. This doesn't count. Once I hit refresh, that'll change after hours, but you can kind of see right here, shorts did return. And then actually this will encumber after hours. So it looks like they did kind of increase there. So I don't know. Very, very interesting stock, mind you. During the actual earnings call, I will have this up so you guys can see all the different screens. And that way you'll be able to see what, like for instance, once Peter says something good, you'll see either an uptick or it trend down. Right now it is sitting exactly on a very strong support point. So just want to watch for this to hold right here. And in case you do not know, some points to watch for are these. So 282, and then prior to that is 258. And so yeah, you know what, even though it is down 7.54%, there is still, it'll come down to what Peter says about the guidance. And because like obviously looking at what happened with Tesla's earnings, that's a very true indication of what could happen with Lucid as well. Just there might be some snippets in this document right here kind of alluding to something. I just haven't came across it yet. Of course, for just basic earnings, I always like to look at cash and cash equivalents, inventory, how much they're burning through, to see if there's any red flags. That is very, very apparent, but nothing that I can see other than the gravity name itself. I'll take a look at the chat. How's everyone doing? How is everyone doing? Michael, Luke, to be honest, no. I would say I disagree, Michael. As what is even stated right here, Peter made a point of pointing, or at least indicating here. Where the hell is it? Right here. So I believe that there's two factors that sets Lucid apart: our superior in-house technology and our partnership with the PIF. So it's good to see that they are relying on this. So when it comes down to them answering this question, I have a weird feeling they will say, like, somehow have some correlation to the PIF and how they really, and they did save the day. If Lucid didn't have the PIF, Lucid would be probably sub $1, in all honesty. I think right now, like when you are buying and selling Lucid, like there is a premium that is placed on Lucid because of the safety net, if that makes sense, associated to the PIF. Nothing wrong with that, I guess. That's why we invested in Lucid, right? So in case you guys are just joining for the first time, I'm going to mute myself in roughly about 6 minutes. Just let the big boys talk. And then afterwards, we'll go over kind of the good, the bad, and the ugly, everything. Right now, even though the stock price is down, I wouldn't say that this is overly scary. There's still a good chance that Lucid could somehow pull themselves together. Hopefully they voluntarily give some stuff, because a lot of these questions, it's not really going to get much info out of Lucid. This one maybe. So is Lucid in talks with any of the legacy automakers to provide battery or motors for production? And I think them talking on hopefully that massive amount of engineers that they had, or I guess are hiring for Detroit, hopefully they just voluntarily bring that up, because I feel like that's something that Lucid could easily do. And especially it would help the stock price just to voluntarily disclose information. But whether they do or not, I don't know. Youssef, nobody is a financial advisor. $3.12. I don't know, dude. Honestly, 312 is a pretty good average. Even in my case, like I've been covering Lucid, I've been very, very good at averaging down and kind of swing trading. So I have two different positions. I believe 340 and then around 380 for my averages. So your 312 is golden. And keep in mind, right, like I do now a weekly video on the top heavily shorted EVs. Lucid is just crazy, crazy high. Like imagine 30.97% of the, like, that is insane. 31% of the free float is being shorted. And just so you guys are aware, in case you guys are on social media, over this last weekend, short interest dropped down to 11%. I think that had some people kind of scared somewhat or just confused. The reason why that dropped is because they were counting the PIF shares at part of the free float, whereas it's not, right? So technically by adding that obviously the conversion, it just lowered that percentage down. So nothing to worry about, but cost of borrow average fairly high for that. Honestly, I think with that recent injection of that 1 billion, their cash is good. I originally was projecting for them to need a second round of dilution probably at the beginning of Q3, but because of this, it's probably going to be maybe beginning to mid Q4, I'd say. So 2.1 billion in cash and cash equivalents, which is fairly good. Inventory is going down, so hopefully, once again, this is best case scenario. I'm going to try and get as much out in 3 minutes before they start, but hopefully Peter comes out with, hey, we actually have been raising demand. We see based on sales and blah, 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 like our demand's rising. I think just hearing those words, like what happened to like RJ from Rivian, he previously stated that, and you see as soon as he said that, the stock price goes up. So hopefully Peter says, hey, you know what, we have demand and we're seeing that by our inventory flowing out, or we're completing more deliveries. I hate to say it because I haven't had the most faith in Peter in the past, but from here on for the next hour, our livelihood is not livelihood, but our faith in Lucid right now is in Peter's hands. So since they put out the preliminary numbers, kind of a double miss in case you are just joining. So their original forecast for revenue is 182.48 million, came in at 172, and then earnings per share was supposed to be negative 25 cents, it came in at negative 30 cents. But that is because they did have abnormally high G&A right here, so that really killed it. So hopefully, I think was his name Gagnon. I think Gagnon will hopefully have some good news associated to that. And you know what, like given the revenue when it came in at 172, it's not all that bad, because during the Q1 earnings, Gagnon said, you know what, we normally don't do this, but you know, like we've seen some slowing in Q1. So I think that's kind of wasn't the best wording, but clearly based on this, imagine if there was like everything was a-okay throughout the whole time period. So yeah, fun stuff. Fun stuff. Timothy, $33.10 average. I don't know. Corey, Ford. Yeah, Ford, I'm sure could be a part of it going forward. Because a couple articles. So I remember early 2022, it showed both Tesla and Ford actually were testing the Air. So they were kind of spotted doing that. And actually Ford, once again, was recently, I think it was like 3 weeks, a month ago, somewhere around there, another article came out, said that Ford was cited testing an Air. So, well, of course, I think the big OEMs are burning through a lot of money, right? So a lot of people are going to be looking at Lucid or just whoever has their technology on point and maybe have some licensing, right? Because I think hopefully Peter does say something about because in Q3 he said that they're looking at the big OEMs for licensing agreements, right? So that would be absolutely key. So hopefully this question right here, question number 3, will get that out of Peter. But it is 4:30. Once again, just in case you guys are joining, as soon as they come on, I'm going to mute myself. You guys won't hear me until the very end. And then I'll have this up so you guys can see at the very bottom left just for stock prices. Okay.
Ladies and gentlemen, thank you for standing by, and welcome to the Lucid Group First Quarter 2024 Earnings Conference Call. Please be advised that today's conference is being recorded. Later, we will conduct a question-and-answer session. To ask the question during this time, please press star 11 on your touchtone telephone. You will then hear an automated message advising your hand is raised. To remove yourself from the queue, please press star 11 again. I would now like to hand the conference over to your speaker for today, 𝗪𝗓𝗡𝗡𝗘𝗧, Senior Director of Investor Relations. Please go ahead.
Thank you, and welcome to Lucid Group's first quarter 2024 earnings call. Joining me today are Peter Rawlinson, our CEO and CTO, and Gagan Dhingra, our interim CFO and Principal Accounting Officer. Before handing the call over to Peter, let me remind you that some of the statements on this call include forward-looking statements under federal securities laws. These include, without limitation, statements regarding the future financial performance of the company, production and delivery volumes, financial and operating outlook and guidance, macroeconomic and industry trends, company initiatives, and other future events. These statements are based on predictions and expectations as of today, and actual events or results may differ due to a number of risks and uncertainties. We refer you to the cautionary language and the risk factors in our most recent filings with the SEC and the forward-looking statements on page 2 of our investor deck available on the Investor Relations section of our website at ir.lucidmotors.com. In addition, management will make reference to non-GAAP financial measures during this call. A discussion of why we use non-GAAP financial measures and information regarding reconciliation of our GAAP versus non-GAAP results is available in our earnings press release issued earlier this afternoon, as well as in our investor deck. With that, I'd like to turn the call over to Lucid's CEO and CTO, Peter Rawlinson. Peter, please go ahead.
Thank you, 𝗪𝗓𝗡𝗡𝗘𝗖𝗧, and thank you everyone for joining us on our first quarter 2024 earnings call. In my prepared remarks today, I'll discuss our partners at the PIF, our better-than-expected production and delivery figures, our cost advantage, and our overall momentum, all of which makes me more optimistic than I've ever been about our future. Now, I believe there are two key factors that really set Lucid apart: our superior in-house technology and our partnership with the PIF, who have been steadfast investors and partners. In Q1, we raised $1 billion in capital through a private placement of convertible preferred stock to an affiliate of the PIF. We're a strategic partner in the country's plan to achieve its Saudi Vision 2030 goals. I'm very grateful for the PIF's continued confidence and their steadfast support. Now, turning to production and deliveries. In Q1, we produced 1,728 Lucid Airs, and we delivered 1,967, both slightly above our expectations. In fact, it was our best quarter to date for deliveries, up 39.9% year-over-year. Our lower production than deliveries is an active decision to be cost-conscious and is not a reflection of production bottlenecks. For 2024, we expect to produce approximately 9,000 vehicles, which is consistent with our guidance last quarter. Let me now provide you with an update on where I believe Lucid stands today. We've made solid progress on both brand awareness and pricing, with our general brand awareness raising in the first quarter despite reducing media spend from the fourth quarter. Now, Lucid Air is increasingly recognized as a superior vehicle in nearly every aspect that customers value. For the third consecutive year, Lucid Air was named the best luxury electric car by US and World Report on its 2024 Best Hybrid and Electric Car Awards. Lucid Air is the only EV to win this category award 3 years in a row, another achievement that sets us apart. Lucid Air solves buyers' key concerns. It has price parity with gas car equivalents. It's the longest range and fastest charging production car in the US market. It's engaging to drive with remarkable performance, and it enjoys a lower total running costs due to its efficiency. Now, consumers are savvy, and they recognize the deficiency of other EVs in the market, particularly the limited range of most EVs. To ease fears of range anxiety, other automakers must produce and install bigger batteries, which results in higher cost to charge the vehicle and longer relative charge times versus Lucid Air. Remember, Lucid Air is the most efficient vehicle in its class, as measured in miles per kilowatt hour, while leading the industry for range and charging speed and having a lower total cost to charge. I've seen commentary about our losses per vehicle, but such speculations reflect a lack of knowledge about our costs and our scale-up intentions. Inside the ostensibly high cost of goods line item is the cost of the factories and equipment needed to make the vehicles and scale our business. If we envisaged the company would only make a small number of vehicles, we would have purchased less equipment and built a smaller factory. But we have a more ambitious goal to provide affordable, long-range EVs for mainstream mass-market consumers. And as we scale, the leverage in our model should become obvious. And we're embarking on a transformational phase, the expansion of our vehicle lineup. Lucid Air Pure is already here with a starting price from $69,900. And the Gravity SUV program is scheduled for start of production late this year. Our SUV's total addressable market is 6 times larger than the market we could access in 2023. And the excitement is palpable. In a third-party survey, already 2/3 of EV SUV purchase intenders would consider Lucid. And this is worth emphasizing. 2 in every 3 people intending to purchase an electric SUV knows and would consider Lucid. Amongst all SUV purchase intenders, EVs and gas SUVs, more than 50% would consider Lucid. Now, this is a staggering figure for any brand, let alone a new one, and thus reflects the significant opportunity ahead. We are continuing to invest in our future with further vertical integration, stamping, body in whites for the Gravity SUV program, paint shop expansion, and powertrain at AMP-1, an important part of our longer-term cost and quality strategy. We've applied all of our learnings from Air and incorporated them into our SUV program. So I'm confident that Gravity will redefine the segment with world-class range, efficiency, charging speed, and interior volume. Later this year, we plan to host analysts and institutional investors at our AMP-1 facility in Arizona to show you our state-of-the-art factory manned by our incredible employees and the machines that build the machines. We'll also have vehicles on the road later this year for you to test drive. And following the Gravity SUV program, we see another step change in total addressable market expansion with our mid-size vehicle, which is scheduled for start of production in late 2026. I'm confident that we can achieve unrivaled levels of efficiency for this crucial mid-sized class vehicle. And again, I can't stress enough, efficiency is the key to a smaller battery for any given range. And a smaller battery is a key element to lower cost when it comes to making an EV. I can't wait to show you our mid-size game changer. Next, I'd like to talk about our technology business. Our Aston Martin deal continues to generate more interest in our technology from other prospective partners. And additionally, we are the sole supplier of the front drive unit to a leading electric racing series. Please watch this space as we continue to discuss monetization opportunities across all aspects of our technology, including our world-class software. I'll close with additional details about our momentum. We surpassed 12,000 vehicles on the road in Q1, which takes us nicely past the critical threshold into boosting word-of-mouth awareness. And I'm pleased with the 39.9% year-over-year uptick in sales in Q1 and with the momentum we're seeing here in April. I always offer caveats. We expect typical seasonal slowing in Saudi Arabia in Q2, and we expect typical seasonal slowing globally in Q3 as consumers go on vacation. Despite this, for the first time, I feel we're on the cusp of escape velocity. We have sales momentum, a compounding efficiency advantage, unprecedented interest from consumers and corporate partners, more than $5 billion in total liquidity, and gravity, which I believe is on track to become the world's best SUV. Therefore, I've never been more confident in our future. So, before turning the call over to Gagan, I would like to take a moment to acknowledge our recently announced management change. 𝗪𝗓𝗡𝗘𝗖𝗧 will now lead Digital's organization as interim head, taking over from Mike Bell, who will be leaving to pursue other opportunities. I'd like to thank Mike for all of his contributions. Mike joined Lucid in early 2021 and was instrumental in building a truly unparalleled software organization. Mike will be staying on for a period of time in an advisory capacity, and I have full confidence in Derek and the digital organization as we enter into our next transformational phase of the company. So I'll end with a big thank you to all of our suppliers, our partners, and our shareholders. And most of all, thank you to all Lucid employees for your commitment, your dedication, and sheer hard work. So, with that, I'd like to turn it over to Gagan Dhingra to provide an update on our financials. Gagan.
Thank you, Peter, and thank you to those who are taking the time to join us today. Before I get to my prepared remarks, I would also like to start by thanking the entire Lucid team. I am continually amazed by and thankful for everyone's dedication and perseverance. Turning to our 2024 first quarter financial results. During the first quarter, we produced 1,728 vehicles, and we reiterate our guidance to produce approximately 9,000 vehicles this year. We delivered 1,967 vehicles in Q1, up nearly 40% year over year and up 13% sequentially. In Saudi Arabia, we resolved some of the logistical go-to-market challenges we had in Q4, and we were able to ramp up deliveries in Q1. We are also pleased with North American volumes, which we think is benefiting from growing brand awareness and increasing number of vehicles on the road and improving affordability. We are encouraged by what we are seeing. Turning to the P&L. For Q1, revenue was $172.7 million, up 9.9% sequentially, driven primarily by higher deliveries. Average selling prices were down sequentially due to mix as well as the pricing adjustments which affected a part of the quarter. Cost of revenue in Q1 was $404.8 million. Despite lower average selling price, our gross margin improved on a quarter-over-quarter basis due to both cost optimization initiatives, including reduction in bill of material and logistics cost, and lower impairment charges in Q1 related to LCNRV. The LCNRV amount was approximately $137.8 million, a 20.8% reduction from Q4. Fixed cost related to the depreciation of our factories and equipment remains a large part of the cost of revenue, and as we ramp up production and deliveries, we expect the overhead per vehicle to significantly improve. There are many controllable and uncontrollable variables that can affect gross margin, and as a result, we don't typically provide specific gross margin guidance. However, I wanted to provide some directional color to aid in your modeling. Looking forward to the second quarter of 2024, we anticipate gross margin to remain flat despite a full quarter price adjustment in Q2 instead of half-quarter impact in Q1. This improvement is mainly due to further cost optimization initiatives. As we move into the back half of the year, we expect to build inventory of components for the Gravity SUV program, resulting in an increase in LCNRV impairments from an accounting standpoint. This, in addition to higher depreciation due to further phase 2 activation, is expected to adversely affect gross margin. I mentioned this in my prepared remarks last quarter as well. We have identified additional opportunities in cost of goods sold and will continue to focus on implementation and further areas for cost out. Longer term, our technology will be a key driver of our gross margin. With scale, I believe you will see strong gross margins with efficiency the key enabler. Now moving to operating expenses. R&D expense in Q1 totaled approximately $284.6 million, up 17.1% sequentially. We expect R&D to increase further as we ramp up the new vehicle programs. I think it's widely accepted that Lucid has the best EV technology in the world. SG&A expense in Q1 was approximately $213.2 million, down 11.5% from Q4. The sequential decrease was primarily due to lower sales and marketing spend due to seasonality and lower professional services and other general expenses due to continued cost optimization initiatives. Although we have identified additional cost reduction opportunities to execute this year, we expect SG&A to increase primarily due to continued investments in strategic growth initiatives. We ended the first quarter with 50 studio and service centers, excluding our temporary and satellite service centers, up from 45 in Q4. On the service side, we ended Q1 with 54 mobile vans in the fleet and 93 nationwide approved body shops. We plan to continue to strategically expand our studio and service center footprint as well as satellite service centers, which will cost-effectively provide additional locations for Lucid customers. In 2024, we see a pathway to operating leverage. The key will be driving volumes and scale. Our stock-based compensation in the quarter was $63.7 million. Total other income was $49.2 million, down from $83.1 million in Q4. The decrease was primarily attributable to a known cash loss of $19.9 million related to the change in fair value of our equity securities of Aston Martin shares, which we received in Q4 as a part of our strategic technology arrangement. In Q1, we achieved an adjusted EBITDA loss of $598.4 million, a slight improvement from $604.6 million in Q4. Moving to the balance sheet. In Q1, we raised $1 billion through a private placement of convertible preferred stock to an affiliate of the PIF. I would like to echo Peter and thank the PIF for the partnership and the commitment to Lucid and our mission. PIF's partnership and support separates us from others in the industry. We ended the quarter with approximately $4.6 billion in cash, cash equivalents, and investments, with total liquidity of approximately $5.03 billion. Note, this excludes the $60.8 million in value of the Aston Martin shares as of March 31. We have been able to consistently sustain a strong balance sheet over time, and as we have done for the last several years, we will continue to be opportunistic in exploring financing. Turning to inventory. Total inventory decreased 18.8% sequentially, primarily due to further raw material drawdown and lower purchases as we optimize our existing inventory. This is consistent with what I outlined last quarter, where we continue to see a pathway to a significant reduction in raw material on hand. Capital expenditures in Q1 was $198.2 million, down from $272.6 million in Q4. Moving to the outlook for 2024. We forecast production of approximately 9,000 vehicles in 2024, and we will continue to prudently manage and adjust our production to meet our sales and delivery needs. As Peter mentioned, we are pleased with the demand we are seeing, but I would also remind you that we typically see some seasonality in Saudi Arabia toward the end of the second quarter. With regard to our liquidity position, we ended the quarter with total liquidity of approximately $5.03 billion. We expect this will give us runway through the start of production of the Gravity SUV program and into the second quarter of 2025. Moving to CapEx. We will continue to focus on our future growth initiatives, and we expect capital expenditures for 2024 to be approximately $1.5 billion. This reflects certain deferrals in our capital outlay from last year, the AMP-2 expansion for completely built-up unit, the completion of the AMP-1 Phase 2 expansion for stamping, paint shop, powertrain on-premise, and body in white for the Gravity SUV program. From a product perspective, we are scheduled for start of production of the Gravity SUV program in late 2024 and scheduled for start of production of our high-volume midsize platform in late 2026. Our performance this quarter continues to demonstrate the positive momentum. The expansion of our total addressable market, the pure upcoming Gravity SUV and midsize programs, provides further opportunities, and I feel very good about our cost optimization strategies and see many opportunities ahead. With that, let me turn it back to Maynard to get to your questions.
Thanks, Gagan. We'll now start the Q&A portion of the call. Before we take questions from those on the phone, I want to pose some questions that our retail investors sent in through the Say Technology platform. Our first question is from Anaf. Can you elaborate on Lucid's pathway to profitability? What are the key milestones and challenges the company anticipates facing in reducing production costs and achieving positive gross margins?
Thank you, Anaf. It's all about scale. The more we can scale, the more cars we make, the more volume we can spread the fixed costs. That's the cost of our investment, our incredible factory and facility, our long-term investments across the sale of each car. So how do we do that? We need to continue growth of Lucid Air sales right now. And right now we're trending up 40% from Q1 this year relative to last year. Now, in a similar period, we see the sales of Tesla Model S down very, very considerably. We're outselling key competitors like Porsche Taycan. It's about scale. And the next thing on that scale path is to get Gravity into production. That will have a multiplier effect upon the market size. And Gravity is scheduled for start of production late this year. And then beyond that, we need to get a mid-size vehicle, a volume vehicle, priced at around, we believe, about $48,000, get that into production, and it is on schedule for production for late 26. And I've got to tell you just how much our current finances are truly dominated by the major investments that Lucid's made for its future. You know, things like the expansion of our Arizona factory. We've got nearly 4 million square feet in there. General assembly is ready. We're putting robots in now for building the body structure for the Gravity. We've invested in a huge stamping line. We're integrating logistics. We're bringing a powertrain facility right under that one roof. And that's exactly where we're going to make the units that we supply to Aston Martin, all under one roof. And I think there's some photographs in the presentation, Maynard, and videos on our social media pages. And then the other thing is that, you know, the real big advantage that Lucid's got over everyone else is efficiency. And I don't say that as an engineer, I say that as a businessman. That efficiency means we can make cars with smaller batteries, with less batteries than anyone else. That means because the battery is the most costly part of an EV, we'll be able to make cars more cost effectively and therefore with more profit margin than anyone else, which leads perfectly to your role, Gagan.
Yeah, thank you, Peter. And two things more, scale and continuous cost optimization initiatives. With scale, we'll be able to significantly bring down, number one, the fixed cost per vehicle, including depreciation of the investment we made in the factory, which is a big part of our cost of goods sold. Number two, labor and overhead, as you get more efficient when you work at the optimum capacity. Number three, also the BOM cost, as volume provides a significant cost leverage. Now let me add to the cost optimization initiatives that we've been working very aggressively, and I'm personally leading this on a daily basis with big support from Peter. As I said in the prepared remarks, we were able to reduce the bill of materials, which is the cost of the parts that go into a car, and also logistics costs significantly this quarter. We have also identified additional opportunities to execute throughout the year. Thank you.
Thanks. Our next question from the platform is Jason. The stock price keeps dropping. What measures will you be employing to bring the price up considerably? It seems product output is extremely low.
Oh, thanks, Jason. Now, look, our share price, it's all about volume. So forgive me, because the share price and the path to profitability are interwoven. You know, against a broader EV market where other makers' products are really down, we're up 40% on deliveries year on year. We're bucking that trend. It's all about scale. It's about recognition on the brand, and I believe we're getting there. You know, and we've got Gravity coming. Just to put this in perspective, in Q1, for the first time ever, Lucid outsold Porsche Taycan. We've outsold the Mercedes-Benz EQE for the third consecutive quarter. We've outsold the Mercedes-Benz EQS as well for third consecutive quarter. We've outsold the new BMW i7. And we've outsold the Audi e-tron GT for the fifth consecutive quarter. And I want to also explain another matter here. We're not manufacturing constrained. This isn't a ramp-up situation. We can make them. It's very much an economy situation. It's about growing awareness of just how awesome the product is, and the sales will follow. And that's the trajectory we're on. It's all about these sales and volumes. And I also want to just put, as a final point, I would like to put, Lucid's stock price in context for this year. Just for context, Tesla's down about 25.6%. Rivian's down about 56%. We're down 27%. So really, there is a trend here in this sector. But clearly, we've got a path to get out of it. Gagan, do you want to add some color?
Yeah, thank you, Peter. And again, we are also very focused on execution and optimization of cost. We have the most efficient vehicle, but it's not just about the sustainability story. It's about growth, it's about scale, and it's about the profitability. I expect it will show in our margins over time as we scale.
Thanks. The third question is from Justin. Is Lucid in talks with any of the legacy automakers to provide battery or motors for production?
Thanks, Justin. Thanks for the question. I can't emphasize enough. This is absolutely central to the whole vision of the company. And that's why we're called Lucid Group. The vision is to have a meaningful impact upon the planet, upon the environment, to take technological leadership and to use that leadership that we can travel further with less and be truly sustainable, and then to share that technology and provide that technology to other companies. And we've taken the first step. We've providing the Sapphire technology, our hypercar technology, to no less than Aston Martin. And there's a time scale associated with this, the technology that we've got in our current lineup of Touring, Grand Touring, was ideally suited to a luxury performance car from another automaker. But what really excites me is the potential for the technology that we're currently developing right here in this building, in Lucid headquarters where I speak, for our mid-size platform. This is the tech that really is going to suit a high-volume family car of the future. And that's what's going to create the multiplier effect. So, as you can appreciate, we can't really talk about specifics, but indeed, we are in talks. There are large OEMs that appreciate the value of our tech, and they are certainly interested in working together with us. Gagan, would you like to add anything to that?
Yeah, and of course, under the right economics.
Absolutely. And I think therein lies another misunderstanding. Because of our current finances, there's this myth, this complete misinformation that our tech is so expensive. And it's completely the opposite. Our tech is made for affordability at scale. It's designed around reducing the need for battery, which is the biggest cost item of making an EV. So actually adopting Lucid's technology is a route to significantly reducing the cost of making an EV. And this is simply just not sufficiently appreciated or understood.
Great. And our last question is from Robert. Will Lucid make an affordable car to compete with Tesla?
Well, I've got an answer to that. We already are. The Lucid Air pure rear-wheel drive, finest machine on the planet, $69,900, the price I promised back in September 2020. We're already competing with Tesla. But wait till our midsize comes out, late 26. That's when we'll have a car, $48,000, $50,000, and that is the big one, the one that's going to be really exciting.
Great. Now we'd like to take questions from the phone lines. Tawanda, can we take the first question, please?
Yes, thank you. Please stand by. Our first question comes from the line of Adam Jonas. Your line is open.
Hey, everybody. Hi, Peter. You said in your prepared remarks and in the statements that you published that sales momentum is building. Can you quantify what supports that statement, and over what period was it measured? Were you talking year on year, or were you talking about momentum building kind of more during the quarter and sequentially?
Okay. Yes. Hi, Adam. So if we look at 2023 versus 22, I believe we were up by 37% or close to 37% from memory. And if you compare Q1 24 to Q1 23, that's where we had the 39.9%, very, very close to 40% growth. So we're bucking the trend of the market quite nicely.
Okay. And just as a follow-up, you said that your focus remains on cost, a relentless attention to cost, and you mentioned some big improvements this quarter on BOM costs specifically. Can you give some examples of this improvement in BOM within the quarter, and who are you benchmarking for the BOM cost for the Gravity? Thank you.
Adam, thank you for your question. So yes, in this quarter, despite the pricing actions, our gross margin improved, and is mainly due to cost optimization initiatives, including BOM cost reduction. And within BOM cost, there are various components, and we are working hard with both the supplier side of things and internally more on the technology side of it, where we are bringing the battery cost down. Our car is the lowest per vehicle range. But also then on the logistics side of it, we are able to bring our cost down significantly quarter over quarter. And in addition, we identified a few other initiatives that we want to execute throughout the year. We're also managing our inventory very effectively. That helps bring the cost down.
Great. We'll take our next question, Tawanda.
Please stand by for our next question. Our next question comes from the line of John Murphy with Bank of America. Your line is open.
Good evening, everybody. Peter, I don't necessarily mean to conflate, the company necessarily with Tesla for many reasons. But I mean, as we look at the S and X, the company was struggling, and it wasn't until the 3 and the Y launch that there was kind of an escape velocity on self-funding. And it seems like, we're looking at sort of somewhat of a parallel here. And I don't mean to make the explicit direct comparison, but it does seem like the space or the smaller vehicle launching in late 26 will be sort of where you potentially reach that escape velocity, similar to when they hit the 3 and the Y. So I was wondering if you would maybe kind of concur with that to some degree, right? I hope you don't take offense to that, but to some degree. And then also, as we think about that, we're seeing sort of these dribs and drabs, and I wouldn't say, $1 billion is a drib and a drab. It's a lot of money. But, sort of this question from investors, will you be able to get the funding sort of guaranteed to get to the launch of that escape velocity, or maybe it's the space, in 2026? So, I mean, one, do you kind of agree with sort of that logic that's when you reach escape velocity, and will you have the funding to get there?
Thank you, John. An interesting parallel and a very thoughtful question from you, as always. I mean, look, the vision is to get to very significant volume, and clearly that comes in 2 steps. Well, there's 3 steps. First of all, scale Air more with brand awareness. Step 2, go for about 6 times the TAM with Gravity. And I really believe there's a very big, significant opportunity with Gravity that Model X didn't capture, because Model X was a bit car-like, a bit CUV-like, whereas Gravity is a proper SUV, and it's a 7-seat, 3-row. And we've got this unique secret weapon that we can go further with less battery and address the critical cost of making these products, and which you'll see unfold as we get to a degree of scale which Gravity will enable. But it's true to say that we won't bear full fruition of all that until we get the mid-size platform into production, and it's scheduled for start of production late 26. Now, regarding our partnership, what really sets us Lucid apart is the combination of two things: a unique world-class technology combined with our special relationship with the PIF. And that relationship with the PIF transcends a merely financial one, because they are invested in us as a cornerstone of transitioning the economy of Saudi Arabia to a sustainability model with their audacious Vision 2030. And we are in this together. They are equally incentivized for success. Right now, running in Saudi Arabia is the first car plant they've ever had operating, and it's a Lucid plant. Right now, we're laying the foundations, literally pouring the concrete for our complete business unit, our CBU factory, which is scheduled to sync with the arrival of the mid-size there in Saudi Arabia. They are incentivized for our success. We are mutually incentivized for success. Nothing less than success is acceptable here.
Okay, that's incredibly helpful. Just one second follow-up. 9,000 vehicles produced or Airs produced this year. You already delivered more than you produced. I think there's well over 5,000 units, or I think there are over 5,000 units in inventory. Could we see deliveries significantly above that 9,000 production number? I think you did 239 deliveries greater than production this quarter. Should we expect something similar to that go through the rest of the year, or could it actually be higher?
We haven't guided on that. Naturally, I'd love to see it. What is crucial here is the key message is that management is taking prudent steps in balancing production with deliveries so that we don't get an undue amount of inventory and have that working capital tied up. This is prudence from management.
Thanks, Tawanda. We'll take our next question, please.
Our next question comes from the line of 𝗖𝗢𝗡𝗘𝗖𝗧 with Citi. Your line is open.
Great, thanks. Hi, everyone. Just two questions for me. First, Peter, can you just give us an update on kind of supplier readiness for the Gravity launch, what the progress you're making there, and just overall how you're feeling about that? And then maybe a second question, just going back to the gross margin. I know there's a lot of noise in that number. I was hoping you could talk a little bit to what you're seeing across trends for kind of variable margins, just kind of looking at parts, material, freight and warranty, excluding kind of labor and overhead costs. If you can give us a little bit of sense of how that's trending, that would be helpful too. Thank you.
Thanks, Ate. So I'm personally overseeing the march towards the Gravity start of production. Literally in this room, every morning, my morning starts with a review of the status. And in order to ready the program, we need to sync three activity streams: the readiness of the Gravity product, the readiness of the factory, our Arizona factory, and the build-out of that, and the installation of all the equipment. And the third thing you covered in your question was the readiness of the supply base. And absolutely, we're all over this. We have literally a few hundred suppliers with thousands of parts, truly drawn upon some of the best suppliers right around the world. And that is something we're managing very closely. And to that aim, I want this process to be really super transparent. So I personally commissioned the team to make a series of videos which will tell the tale for everybody who's following the company, the path to Gravity, the road to Gravity. The series is, we launched that just last week, and that's going to trace those three connecting pillars: the product, the factory readiness, and supply chain readiness. But we've got a major advantage this time with this product, Ite, because we're not trying to do it coming out of a pandemic. So there should be a lot more opportunity for us to do SQA, which is supplier quality awareness and audit. And we have our supplier quality engineering teams visiting those suppliers and checking and verifying and validating the readiness for start of production late this year. Now, regarding margins, I would like to defer the question to Gagan, please.
Yeah, thanks, Peter. So, Itay, on the gross margin, we have been working very hard with both the supplier side of things and then taking cost out of the business. And, looking at the BOM cost first, it's a significant effort. We are continuously bringing thousands of dollars out from the cost. But one thing this quarter specifically, I want to call about technology. Our car also has a lowest cost of ownership. And if you look at in the investor deck, we added slides 7 and slide 8 explaining how our car has the lowest cost. And it will be good for you to look at that. And then in parallel, the cost optimization team, this team is challenging each and every one, and also for every dollar value. And I'm personally leading this initiative with support from Peter. But what does that mean to us? We're able to significantly bring the logistic costs down. We're looking more and more opportunities. Now, it's a matter of scale because we today are spending significant amount of money on the fixed cost. Even on the variable cost, we identify more opportunities, and it will help us because look at from suppliers' perspective also, they also allocate their fixed overhead to the volume they deliver. But we have part to go there. And with Gravity coming late 2024, we're getting close and close to our capacity, and that will give us enough operating leverage.
Thanks, Tawanda. Can we move to our next question?
Thank you. Our next question comes from the line of Andrea Shepherd with Cantor Fitzgerald. The line is open.
Hey, everyone. Good afternoon. Congratulations on the quarter, and thanks for taking our question. Peter, I wanted to follow up on maybe deliveries to Saudi Arabia, trying to get a sense if it's possible to maybe quantify it a little bit as to how that agreement will develop, later this year, next year, and onwards. I think in the past you had mentioned that, and please correct me if I'm wrong, but that a lot of these deliveries would include the Gravity and the midsize high-volume model, which have yet to reach their SOP. So just wondering, are we able to quantify what these deliveries to Saudi Arabia will be this year, next year, as you work your way up to the Gravity and
we're not planning to guide on the split in the future, but our deliveries in Q1 exceeded 500 units. I'm very confident that we've got equal demand for our products in Saudi, particularly for the SUV. That's going to be quite an interesting market. But again, I'm not in a position to guide right now on these. And we haven't decided yet whether we'd guide on that specific split either, Andrew.
Okay, got it. That's helpful. But so over 500 deliveries in Q1 were to Saudi Arabia this past quarter purchase. So that's helpful. Okay. And then just a question on liquidity. You touched on the updated liquidity. Obviously, the $1 billion recent capital raise fortifies the balance sheet. In your presentation, you mentioned that liquidity on hand is sufficient to fund the business, I believe, is until second quarter of next year. So I guess my question is, as you're thinking for your next capital raise, do you, to the extent of the ability you can answer, do you foresee that coming from the PIF, or perhaps would that be from external capital? I guess what I'm asking is, with $6.4 billion in funding from the PIF so far year to date, do you foresee a situation where the next raise may also be with them or elsewhere? Thank you.
Well, look, we're a technology company. We're on a growth trajectory, and it's a capital-intensive endeavor. We know that. And so all I can say is that we will take an entrepreneurial, opportunistic view of raising capital when the business requires it. We are very, very aware and appreciative of the very special relationship and the steadfast support that the Public Investment Fund has shown us and gone every single round supporting us to date. And I think that puts us in a very strong position. It takes us past the start of production of Gravity and well into next year. And I think that's an enviable position. It puts us in a very strong position financially.
Thanks, Tawanda. Can we move to the next question, please?
Our next question comes from the line of Tobias Beith with Redburn Atlantic. Your line is open.
Hi, good evening, and thanks for your time. I have two questions for Gagan, please, and I'll ask them separately. Through 2024, the expectation is that production processes will become more vertically integrated as you continue to build out the phase 2 expansion of AMP1. Can you confirm whether this will increase losses in the near term while volumes are subscale?
Yeah. So as I said in the prepared remarks, we typically don't guide gross margin because of certain controllable and non-controllable factors. However, I can provide some directional color. In Q2, I expect that gross margin will remain flat despite the full quarter impact of pricing actions we took in Q1. In Q1, the impact was for part of the quarter. Scaling back to second half of the year, now purchase of Gravity components ahead of production, which will result in increase in inventory, i.e. result in LCNRV, and also higher depreciation as a result of phase 2 activation, we expect to have some negative impact on the gross margin. But then, we have Gravity scheduled for production late this year. As we move to next year, we expect things to change significantly.
Okay, but sorry, just to ask my question slightly differently. On a variable margin basis, do you expect the higher vertical integration to decrease the variable margins in the near term on both Air and Gravity?
Yeah, that's a great question. Now, it is a game of scale. We're getting better on contribution margin trim by trim. Now, the BOM cost, freight, and certain overheads, part of contribution margin, gets significantly impacted when you have a low volume. And with scale, it significantly improves because suppliers also amortize their fixed cost based on the volume they deliver. It's a matter of scale. The more we get close to our capacity, our margins get much better.
Okay, understood. And then just to return back to the question that Adam and 𝗖𝗓𝗏 asked, if I exclude the impairment charge from your cost of goods sold and make a simplistic assumption that all of the D&A charge is within COGS, then in the first quarter this year, underlying costs per unit delivered actually increased 5% sequentially. And given that delivery volume was 13% higher, with some of these cars presumably benefiting from last year's overproduction, I was wondering if you could comment on what happened.
Yeah, it is a factor of incentive as well. So if you look at, we took some pricing actions in the current quarter. So it's because of the pricing actions which were largely offset by the cost reduction activities.
Okay, but the pricing actions, surely they're not in your COGS anymore because I've excluded the impairment charge.
Yes, but it's multiple things that go in that factor. So when we say pricing actions, we basically like for Pure and Touring, that the pricing that we offered and plus mix both together play a significant role in that component.
All right, this has been most helpful. Thank you very much for your time.
Thanks, Tawanda. Can we move to the next question, please?
Our next question comes from the line of Stephen Fox with Fox Advisors. Your line is open.
Hi, thanks for all the color this evening. I just had a question on the push to have more third-party related sales of hardware and software. I guess I was wondering if you would say over the last few quarters whether there's been an increasing number of bottlenecks in getting to the finish line on some of these deals. I'm curious just because it seems like you've proven out some cost advantages that you can provide as a from a third-party standpoint, and the pressures on OEMs to get their BOM costs down have only increased in the last, year to date. Any color on that and your progress going forward would be helpful. Thanks.
That's an interesting point, Steve. I would say this, that there's a time scale, there's a cadence, there's a chronology associated with any such arrangement with a traditional OE. There's a natural cadence to the pace they work and operate, and also there's this sort of impending regulatory overhang in terms of the drivers for their transition to sustainable mobility model. So all I can say is just watch this space. We need patience when we're talking to large automakers.
Okay, thank you very much.
Please stand by for our next question. Our next question comes from the line of James Picariello with BNP Paribas. Your line is open.
Hey everyone, this is Jake on for James. So if I just look at your liquidity and the implied cash burn with the $5 billion lasting into the second quarter of 2025, it looks like the implied cash burn has stepped up from roughly $900 million in your previous commentary to over $1 billion now. So how should everyone think about cash burn really through next year once you get through the launch of the Gravity?
Yeah, so if you look at, there are multiple things go in the cash burn. One is the capital investment that we're making. As we are guided, we expect to spend around $1.5 billion in our investments, which is expansion in Arizona, taking from 30,000 installed capacity to 90,000 because of paint shop stamping, body in white coming later this year. And then M2, which is in Saudi Arabia, where we are making significant investment building our CBU facility. So that capital expenditure play a significant role there. And also in the next year, we have significant amount of capital expenditure that will continue.
Got it. It's very helpful. And then just following up on John's question about the mid-size, more mass market model, have you guys thought about providing some more just detail on it, maybe some teaser pictures a little earlier to try to drum up some more interest from a broader consumer base and even potentially opening the door reservations to just generate some more liquidity? Thank you.
Well, and that's an interesting point. I actually think that the consumer has been ill-served by some players in this space by taking reservations way ahead of time in a very artificial manner. What we believe is a much greater degree of transparency and really getting closer to that product being an absolute reality. Remember that any such reservations and money taken is a false form of liquidity because it's something we would have to put in escrow anyway. It's not true liquidity. And we believe in absolute transparency and showing the product with a realistic specification. As we're doing, say, with Gravity, we've not taken reservations deliberately until we get closer to the start of production. This is a philosophy that we've adopted, and we will let you know that time in the future when we open a waiting list for Gravity. And we're not even close to, I don't think it's right to be opening up reservations on a product that is over 2 years out. I just don't think I think it all serves the consumer, and it's something that I think there's a transparency that's lacking from that.
Thank you. Our next question comes from the line of Stephen Gengaro with Stifel. Your line is open.
Thanks for taking my question. Just going back to a question about the cash burn, can you give us any sense as we think getting to the mid-size launch, sort of the cadence of CapEx necessary in 25, 26 timeframe?
Well, I mean, it's interesting. We haven't guided on that. But I mean, we are in a very good position, which will see us beyond Gravity start of production. We have some amazing incentives from the Kingdom of Saudi Arabia for setup of our factory there, our AMP2 facility, and that's where we're going to put in the mid-size product to start with.
Great. Thank you. And just a quick follow-up on the Gravity order question. How soon before production begins do you open up Gravity orders?
It's an interesting point. I think that, as I say, that we can look forward to us opening a waiting list when we feel that in absolute transparency we can release more specific details of the trim and specifications of that vehicle. I don't want to do it in an environment of opacity. Gravity is scheduled for start of production later this year, and we're on that runway now. Every day counts as we build up a crescendo to that launch, and we will let you know. Watch this space.
Great. Thank you, Peter.
Thank you.
Thank you. So this concludes Lucid's first quarter 2024 earnings conference call. Thank you all for joining us today, and you may now disconnect.
Okay, so just straight off the bat, they didn't do any closing remarks. So that's something to be of concern over. Okay, there we go. Got that off. Okay, so got Alex with me. I'm going to join that. How's it going? Okay, there you go. Okay, audio is working and everything's good. Okay, so in case you guys don't know, this is Alex with the EV guy on Twitter. So let's start off. I have a lot of things. I don't know. What's your overall initial take on it? I'll start off with you.
So before the call, earnings kind of were as expected. I don't think that there was much variation there, you know, kind of expected to be right around that earnings per share being negative 0.25. You know, capital is pretty much what they brought in. They hit the mark pretty much there. So nothing too crazy there, but obviously a lot of information from the earnings call, some good, some bad, some kind of they just hedged around and really no additional information there. So it's kind of, you know, a lot to take in, but we'll see.
Yeah, so I kind of pointed out some things. So they didn't even talk on interest rates. So that's something that is so they like, okay, I'll start off with this. Again, you guys can interpret this as good or bad, but they didn't talk on interest rates. They didn't talk on specific output from AMP2. I initially wrote down they didn't give dates for the Gravity, but they've said, I think 6 times during this call that's going to be near the tail end of this year and that they're not going to open up the reservation. So probably Q4, I assume, probably September. That seems to be their go point. I think 3 of their launches have been September, Q4. So as far as an overall take, I think that makes this future guidance very bad because there's no real reason to buy Lucid right now. Because you can just wait a little bit. Like they have sufficient amount of capital up until the first half of 2025, although I think technically they'll be diluting in Q3 right before the Gravity reservation. But yeah, I feel like there's just a lot of things they did not really elaborate on. And I kind of found it interesting, Peter's last point. He said that, I think he mentioned it twice, they value transparency. So if you actually look at their earnings right over here of all the sheets, so just let's look at this. So this point right here, so they elaborate that they might not be able to use the Gravity name. Why did we not hear anything about that? Like, I feel like if you look for transparency, everything's about wording. Like, you can say get one point across and say it 5 dozen different ways, right? You could easily say, you know what, we're currently undergoing some certain like a kind of, I don't know, trademark issues, and that is slowly pushing our reservations back, because I don't think Lucid needs money, right? They want the reservations, bringing in kind of locked in capital. They tried to spin it saying that like they're doing it closer to the date. I don't know. Like, what's your thoughts on the gravity? Like,
Yeah, kind of interesting that that was never really addressed at all. You know, if I remember right, they didn't really open up the Lucid Air reservations until closer, so I think that part's accurate. You know, where they typically have all the information in place, they give you the actual price before they really kind of start that process there. And I think that's kind of what Peter was alluding to, you know, so there's not the fiasco like there was with the Cybertruck, where it comes out, you know, $60,000 more than what it was originally advertised at. So I get what he's getting to from that point, but I agree there should probably have been, you know, some addressing of concerns for the Gravity name, if that's something that is actually ongoing litigation like we see with the, you know, filings there. So there's some transparency there, and then it's kind of, you know, the other angle is they're not being fully transparent there. So kind of interesting take for sure.
And Peter started his salesman pitch at the beginning, as what he typically does, but he mentioned EV stats that I guess X amount of people were probably asked, and 2/3 of them said that they would buy a Lucid Gravity in the EV sector, or SUV component. Have you seen that stat? I have no, like, I feel like I want to call their investor relations tomorrow and be like, what stat were you guys talking about? I want to know, like, where 2/3 of people said that they'd buy the Gravity. Like,
yeah, I've never seen that before. Obviously, if that's true, it's bullish, but you know what I mean? How many people say they would buy something then not actually follow through? So that's the hard thing there. You know, it's kind of interesting also hearing that with, I guess you could say there's a lack of brand recognition with that for people that I talk to that are mildly like, no, Teslas. They've never heard of Lucid, or they just know of it as an expensive car. So it kind of seems interesting that if you were given a poll between, you know, what they said, the Porsche Taycan, the Audi e-tron, the Mercedes EQE, and then BMW, that you would pick Lucid out of that. So it'd be interesting to see kind of who the sample selection was and sample size there for sure.
And one thing that I don't know, what was that guy's name? Who was the one? Not the official, the female, the moderator. Who was the guy that was pretty much guiding the moderator? I don't believe they've had that in the past, but he was cutting off the analysts like hard. You could tell that they probably would want to ask follow-up questions, but that stood out to me. I always catch on to those minor nuances, but clearly even the tail end, Peter always ends with a speech, every single time. Closing remarks. There was no closing remarks after that. And that guy, I don't know who his name. Do you know who he is?
I don't know.
He was strict. He was like, okay, next question. It's like, oh, because I think the analysts were, I don't know if you got that vibe, but they were a little bit more aggressive with their questions. And in the past, I've even said, you know what, like, analysts accept the stupid answer and just say, okay, whatever, that's your answer. This time they were like, but what do you mean? Especially when Gagnon, like, I think it was Andre Shepard, he's like, what are you talking about? What are you talking about, Gagnon? That doesn't make sense. And not to go against, I kind of miss Sherry. I know she was very flawed in a lot of ways, but at least she gave concrete answers that, I don't know, like this one, once the transcripts come out, Gagnon's current speech at the very beginning, he just copied and pasted those responses into the analyst responses. I feel like nothing was generic, nothing was original. And hopefully everyone, there's, what is it, how many people here? 390 something. Going forward into upcoming earnings, this shows how important questions to management from retail is. Like, it didn't yield anything. And maybe, if anything, Justin's question about how if Lucid's in talk with any legacy automakers, I feel like that kind of did a little bit more damage. Like Peter just said, like the mid-size SUV, which is coming out late 2026, that's going to be the big thing for Lucid. But I didn't get anything from any of those.
No, there was nothing added to, about more than what we knew for the mid-size, which is disappointing. I think that would drop some momentum and, give some people to be bullish on. But I mean, we knew it was going to be $48,000 to $50,000. That was released in January. We knew it was going to be end of 2026. It's kind of disappointing. But the weird thing that I heard, but correct me if I'm wrong, is sounds like he said it's going to start at AMP2, so starting in Saudi Arabia for the mid-size, rather than kind of coming to the U.S. market, which you figure is a bigger total addressable market, which I heard that and kind of see that as a interesting play.
I must have overlooked that. Yeah, I think it usually takes about 2 hours. So once the transcripts come out, I'll listen. That must have went over my head.
I think he said it right at the end there, kind of in that last little bit. From what I thought I heard, he said starting at AMP2. So if that's the case, very interesting. Just because I feel like a $50,000 EV in North America market would do great, and that's direct competition to the Model Y, the Kia EV6, multiple EVs out there in that range, especially because they would qualify for the 7500. At least part of it there. So if they're talking, mid 40s, that's a very competitive vehicle.
Yeah. And I think that question by Robert right here, that was more oriented towards what Tesla announced, like the lower priced sedan. So I think maybe Peter just purposefully didn't answer that correctly. It's we're definitely not, I don't feel like they gave their full transparency. The only thing that I think is kind of positive is the amount of cash that they do have. Legitimately kind of shows at least a good 2.5 quarters before they do need to raise any additional capital. And same, it comes down to the just wording. So I think it was John Murphy possibly who said about in 2025, when you do need capital, who are you going to? Like, I feel like Peter could have just said, yeah, like you mentioned at the beginning that the PIF is supporting Lucid. I think we all generally know that. And you could easily say, like, you know what, we're going to look for the best opportunity, but we're not going to say no if they want to. Like, that would have been a perfect answer. But no, he's like, nah, we're going to think of it from an entrepreneurial standpoint. And so it's like, shit. Like, come on, man. Just say, like, the PIF is going to support you. Like, the market already knows that. Just fucking say it. I don't know. I feel like... And you can tell when Peter's genuine versus lying. He stutters a hell of a lot when you can tell he gets nervous. Like...
Agreed. Yeah, it's always interesting to hear that. Hopefully they can avoid further dilution like that, or doing additional capital raises, because that's just going to take the stock price. Hopefully they can get some additional like OEM deals, and that would be a better financial incentive for that. But PIF is always there, which is the good news.
Yeah. I honestly do think that Lucid would be sub $1 without that benefit, because even if you're comparing a lot of EVs just on the PS ratio, like Lucid has a higher ratio, is more valued than Tesla, Rivian, like because of the PIF. Like a lot of those companies don't have the constant liquidity. They'll have to go to the open market, whereas Lucid can easily just, hey, help a brother out.
Right. Yeah, I would say the two biggest bullish things for me from this, were that kind of, I just posted about it, the, Lucid Air is outselling the Porsche Taycan, the Mercedes-Benz EQ and EQS, the Audi Q8 e-tron, the BMW i7. So honestly, that's really cool to see that, they're outpacing the competition there. And, they're not a household name by any means. So it just goes to show that their products are, what's selling people there. So I like to see that. And then I also like that, and, one of the first investor questions they asked about scaling and volume, and they said that they're kind of going to focus on decreasing production a little bit with that 5,000 vehicles on inventory. They're going to kind of slow production so they're not exceeding demand too extensively. So hopefully they can, get rid of a little bit of that stockpile of 5,000 vehicles there, which would be obviously good to see. So other than that, not a lot of too many positives in that call. There was little to no information on the midsize like we talked about yesterday, which would have been huge. There's little to no information on the Gravity again. So, they're going to have to do a capital raise. It's just all depends on, to what. So I don't know. I don't see a reason to buy in today. I'm going to continue to hold out on the sidelines.
Yeah, I actually, it would have been nice if they did elaborate a little bit more, because that's the most context that we actually got from Peter about profitability. And it'd be nice for them to come, because I've done estimates. I think it's roughly around 140 to 160,000. That's their pivot point. That's when they'll, assuming they can get to that, that's when they can be profitable. That's assuming like Grand Touring, AGT, those kind of margins. So logically, they would have an estimate. Like, they're not dumb.
Right.
They could easily just say, you know what, once we get to roughly, even if they overinflate it, once we get to 200,000 vehicles every single year, that's when we will obtain profitability. Honestly, even if they overdo it, they come in at 140, 150, then yeah, so be it. I think the market would absolutely love that transparency, but still, I guess we've got more context than anything. And yeah, honestly, I'm trying to think of some positives. They did maintain at least their expenses. They don't anticipate for it to get worse. So at least it's going to maintain throughout the whole year. So that could be a positive thing or a negative thing, depending on how you see that. But I feel like they should have integrated interest rates into that, right? Because interest rates is a big thing. Still, I wish they would have at least talked on the Gravity. One of the analysts, it was one of the last questions, because I believe it was Q2, also then in Q3 of 2023, they gave a certain percentage of all the agreements, how ready they are for the Gravity with their suppliers. I believe it was only 40% in Q2 and like 70 something percent in Q3. They just said that they are monitoring and ensuring everything is ready, but that's not really, I don't know. It'd be good for them just to say, hey, we have all the agreements slated, we're just waiting for this, blah 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 blah.
No, I agree. Yeah, it's interesting to, kind of the hedgy answers. It's as expected, unfortunately, where you never get that direct answer with what exactly you want to hear, but I don't know. Not leaving with the greatest feelings for after this call.
Yeah, but at least on the charts, again, that could be a positive thing or negative, but it is down 8.52%. So options were signaling like a 30% swing in either direction. Analysts were about a 10% swing. So it's it's not in the 250s. So that's kind of a positive at least. So I think people are seeing some value at least. And so, yeah, I guess them knocking down inventory, that does, even though they didn't really say it, that does show that there is a certain level of demand. They did reiterate their 9,000 target. Good cash. So yeah, I guess those are some of the positives market's clearly taking away. We'll just have to wait and see what does happen. I don't know if you pay attention to Palantir, for instance. I kind of vaguely do, but there was one, the 𝗪𝗧𝗪𝗧𝗛, and he did a interview. It made me laugh like crazy, but the whole basis was about against shorting. Palantir, just for transparent, is about 4.5% short interest. He told that he wants to stop the shorters because all they're doing is snorting coke and all this other crap. It was absolutely the best sentence ever from a CEO. That would have been something that I would have loved for Peter to say, because like Lucid is just mind-blowingly heavily shorted, like 31%, and probably shorts might double down tomorrow, but like to have this level of short interest is just insane, not justified. So it'd have been nice for Peter to come out and say, you know what, like, we're going to be monitoring short interest, just have them on their toes. I don't know. Am I alone thinking this, or what do you think?
I mean, yeah, I remember when what was it, Mullen said something about that, and gosh, I can't even remember. Their stock went up by like 50% that same morning or something crazy like that. There's definitely some things that would be bullish on that, but I guess they probably don't want to, revolve only around the stock price, which I like it when CEOs necessarily aren't focusing just on the stock price. They talk about why their company can still achieve. So I guess I see both sides of it for sure. Kind of seeing that he's not just focused solely on stock price is good in my eyes.
Yeah, no, you're right. As soon as you go down that path, and there's a fine line between a credible company and just a meme. And you can tell Lucid's been sometimes borderline, is kind of comical just on how things are. And so I get your point. Yeah, it's a fine line, and you can tell Peter, he likes to, it's all about luxury, right? And I guess you don't go fight a dirty battle with shorts. You just do what Tesla did. You just fuck them over by doing good production, essentially.
Yeah, I agree. Yeah, I think probably one of the best questions actually that was asked, I really liked the one where the analyst asked, do you see the midsize as like your Model 3 moment? I really wish Peter would have kind of more addressed that. He was very vague with his answer and just said that there's a 3-part component, scaling Pure, scaling Gravity, and, continuing their tech. I wish that he would have more kind of came out and frankly just said yes, like the mid-size is going to be what helps us grow. The Pure is our, proof of concept, shows what we can do. The SUV, the Gravity is going to hit a huge TAM, but I wish he would kind of just said like, yes, the mid-size is what's going to be our bread and butter, and like kind of how we will break off maybe a little bit from the PIF, where we're not relying like on financial support, as kind of that point where they can support themselves. I wish he would have, spoke more on that though.
Yeah. So, have you listened to a lot of the earnings calls in the past?
Yeah, I don't think I've ever actually missed a full earnings call. I've maybe not caught them live with work and stuff, but yeah, I've heard them all.
So, do you think that this was overall like an improvement from previous ones, or do you think, what's your thoughts on that?
Well, I mean, overall, there's really no big red flags that came up today. There's nothing, no like great bullish things either, though. It's kind of just neutral. So hard to say. I mean, there was nothing that I thought that was like, oh my gosh, I wasn't expecting that, or this is going to tank the stock price. So overall, it was very smooth. Like you said, it was a little interesting with the moderator kind of interrupting people there at the end. Saying, all right, next question. But other than that, I feel like there were no big issues.
Yeah, you're right. I guess the reason both of us are bringing stuff up is because they didn't bring it up, but it's not really bearish. So they didn't really say, hey, you know what, like Gravity's pushed back to next year. They weren't bearish. So yeah, you're right. I guess in essence, if you look at it for face value, there wasn't all that much negatives. It's just the omission aspect. That's kind of what maybe wasn't the best, whether it was
kind of
on
leaves
purpose
you
or not.
asking for more. Yeah, that's how I see it. It's just there's nothing that's going to tank the stock price, nothing that's going to raise the stock price. In my opinion, it's going to kind of hover in that general vicinity. It left us asking more questions, but I mean, it will come in time, unfortunately. But like I said, yeah, nothing that is a big red flag that was discussed today. So
a lot of the analysts were very focused on expenses. So I guess most of them didn't really care and wasn't concerned about the Gravity. They were more concerned with the expenses. So probably starting tomorrow, once the ratings come in, I feel like it won't be that significant of changes, because they kind of stated that it'd be flat throughout the rest of the year, right? So probably the analysts will resemble the same thing, just not really overly bullish, not really overly bearish, just it's going to be the status quo. Until interest rates, right? The whole EV sector is very sensitive to interest rates. So once that happens, whether it be September or whenever, then that'll help. But
no, I agree with you. I think it'll be a lot of hold ratings, nothing too crazy going on. And just looking at the stock performance today, it was up 9.5%, and it's already back down 8.5%. So pretty much just gave up what it, got today. So again, nothing crazy there. It's not down 30% after hours, like you mentioned, or anything like that. So I think we more or less see a flat and hold. And like I said yesterday, maybe kind of gravitate back towards that 250 until we get the gravity updates.
Yeah. So I think it's generally, that could be seen as a positive thing. We'll just have to wait and see what analysts interpret this as. But yeah, you know what? I think if you actually look at the revenue growth compared to other EVs, somewhat good, I guess. Rivian's earnings are coming out tomorrow. So people typically, even though they're not in the same segment exactly, people always compare Rivian and Lucid, right? Started production exactly the same time. So we'll see what Rivian comes out with, but somewhat neutral.
Nice. Yeah, hopefully I'll be checking out Rivian's tomorrow, so I'll kind of be following that one on Twitter as well. I guess one last thing that I didn't say that I do really think is another good thing is Peter did announce that they had 500 Lucid sales in Saudi Arabia itself. So nearly 1/4 of their total deliveries were in Saudi Arabia. I like to see that, this has been their big project and, where they're going to be going for the future. So to see that they have a, pretty decent sell through in that first, in Q1 there, I really like that. So hopefully we can continue to see that. They said that they weren't sure if they're going to divulge the numbers for every quarter of about, where the sales took place. I hope they do that. I think that being, like you said, transparent is huge, especially, if they are putting in, significant facilities with AMP2 there. I'd really like to see, those numbers and seeing what is kind of coming to fruition there in Saudi Arabia.
I don't know if anyone's in the chat does live in Saudi Arabia, or if but what does he mean when he, who was it? Was it Peter? That seasonality, majority of the deliveries are in the second half of 2024. Was he just putting that out there just to kind of push the onus? Hey, like deliveries will come just in the second half. Why would seasonality deliveries be in the anything? I didn't really understand that. Is that correlated with? I don't know. Do you know much about that, or anyone in the chat?
I personally don't, but he said, in the second half. So I think it was what is it? Into May. The end of May, it must be slow for sales. I'm looking up to see any Muslim holidays that are going on at that time, just to see if there's, anything big. Because obviously in China, they have, the 10-day shutdown. I'm seeing if there's anything that I can find similar to that, but I don't have a strong knowledge of Muslim holidays.
Yeah. And they didn't specifically state it, but they did a really big sale in February, and Gagnon mentioned that the lower prices attributed to the higher demand. So clearly, hopefully they're smart and they say, hey, you know what, like the market wants a lower price vehicle. Some people in the chat are saying maybe it's to do with Ramadan, or people go on vacation. I don't know.
So yeah, I've just found a chart of kind of the big Islamic holidays, and March 11th to April 9th was Ramadan. So that could definitely show on Q2, but he did mention the second half of Q2 once or twice, I believe. So Lucid Oasis, who's on X, does live in the Middle East, can touch base with him. He's very knowledgeable and really down-to-earth guy as well. So I'll shoot him a message and I'll kind of see what it says.
And actually, just speaking out loud, this is the very first time during Peter's initial salesman's pitch, they didn't mention that 50,000 up to 100,000 sale. They didn't really break it down. Last quarter, they said that they were going to start delivering those. They didn't really elaborate to see. I don't know. I feel like that would have been a good talking point. Like, we started to deliver some of the 50,000. I don't know.
Right.
That's something they missed.
Yeah, I agree. If they could reaffirm that and just say, we've delivered 500 of the 100,000 vehicles of our agreement, like this alone created this much revenue, I think that would be a good sign to see. So who knows?
Yeah, it would be really nice, especially with like soccer or football, wherever you guys live. Like that's one thing that I was really cringing at, is like Lucid had the opportunity to really, especially the World Cup, like to market. And I feel like that's one thing that a lot of people would really, that's amazing marketing. They didn't have to spend like Super Bowl ads or anything like that. Just have put a pop-up studio outside of like the actual stadium. Like that is simple, probably requires very little expenses, and that would be huge, I think.
No, that would be a great idea moving forward, kind of hit those markets. Obviously they have the new league there with multiple, famous soccer players, football players, whatever you want to call it. So they have a huge market there. So they could also do that with like the new golf league out there and kind of hit some of that market for sure.
Yeah, but you're right. That was a good catch about that in excess of 500 units in Q1. So that is a good touch, actually. Yeah, because shows at least there is some level of demand. But yeah, it would have been nice as well for China. But you know what? All in all, I think the market's keeping it somewhat stable where it is. So it's just, yeah, nothing really crazy. If there is a quick Swift, maybe I'll buy if it gets back to the 250s tomorrow, just for that's how you make money, right? Like, especially with Lucid manipulation, those quick abnormal dips down, those are amazing buys.
No, yeah, I agree. There's always opportunities out there. You just gotta hit it right, unfortunately.
Anyone in the chat, last minute questions or anything that you wanted to bring up, or you, Alex, anyone?
I think that's about all I got. So,
okay. So
any questions?
Everyone, this for those of you that are on X, this is Alex from the EV Guy. Very good source of information associated to covering Tesla, Rivian, Lucid. I think he does also Polestar. So make sure you pop over there to give him a quick follow. I'll put this in the chat as well. Make it nice and easy for you guys if you're interested. John Russell. Oh yeah, so what did they say? Effective immediately, there was someone taking over digital. Says John said Michael Bell is gone. Is that true?
I know they started the call and said that somebody was leaving. I couldn't hear exactly who it was, but he did say somebody was leaving and they had a successor. Whoever was leaving was going to stay on as an advisor for the short term.
Okay. Yeah, maybe I'll just have to wait for the transcripts to come out, because I actually liked Michael Bell. I remember he did a NVIDIA conference and I joined, and I asked him some questions and he actually answered like legitimate, nice, very well, no BS. Just because I live in Canada, so I just said would like because the whole conference at the time was NVIDIA chips being integrated into Lucid and how that's going to help with autonomous driving. So I said like, can you obtain higher levels of autonomous driving in Canada, given, snow conditions and all that other stuff? And he said, no, unfortunately not. It won't really work as well as clearly the States or whatever. But I love that answer. He didn't BS. He could have just said, you know what, like, maybe. He just said, no, unfortunately, it's not really going to be suitable. I was like, oh, well said. I appreciate, you know what, even if it's bad news, I like answers like that.
So there is a article from TechCrunch. Sean O'Kane said that Vice President of Digital Michael Bell has resigned from his position. So there is a article about that. So that's what they were kind of saying briefly at the beginning there.
Well, that's too bad. He was a good guy.
Oh, bummer, man.
M said, when do you think ESS will come into play?
That is a good question, and I have no answer there.
2022, they mentioned that they have a prototype number 2 and that they were using one of the 3 leased properties that they just did in 2022 for that. Right. So that they have stuff. Clearly they're not based on like you'd see a significant jump up on their balance sheet on how much they'd be spending for G&A and R&D on that. So clearly that they're not doing anything with it, I don't think, right now.
I know, right? And I remember investing originally. That was one of the things I was bullish on, is their energy storage. Looked like a huge opportunity, you know, kind of just like Tesla's energy storage is one of their, I think it was their fastest growing market last quarter on their last earnings. So it's a missed opportunity on this time, unfortunately.
Okay, yeah. Someone just pointed out, I guess there was an 8K as well. Yeah, it does say the company announced that Michael Bell, he'll be advising up until August the 12th, 2024.
Yeah.
Mike, you know what? When I was looking, I think he's actually one of the only, I guess not to be bearish on him, but I believe he's actually one of the only people to legitimately sell. So can you guys see this? Let's see, I'll make this a little bit bigger. Okay, so this is all the insider transactions. Most of the sales that have ever occurred are for tax purposes, so transaction code F. The PIF transaction code P is a legitimate purchase. So that's a bad thing. I feel like that would be a good question to next quarter, I guess, to ask Peter, are you going to buy any shares? I know he has a shit ton that was gifted to him, but are you planning on buying anything with your own money? Because SoFi rallied like 5% today at its peak because their CEO bought another 200,000 just randomly. Here it is, Michael Bell. So if we click on him, he sold for taxes S. So that was a straight up sell. He had a lot of shares. Well, currently he has 1.4 million. Damn.
So you know those aren't lasting.
Yeah, those will be gone. And he actually was just awarded another 137,000 on April the 11th. Damn, that'd be nice to have that amount. So yeah, but yeah, you're right. Those will be gone sooner. Yeah. Okay, note to self: ask that question for future reference. For are you planning on buying
Get it on say right away.
Yeah. Let's see. Things could be worse. You could have invested in Fisker. Yes, Fisker. Yes, they are.
Yep, made that mistake too.
The only time I invested, it was at 5th. Like it had a crazy sell-off, and I think it was the bankruptcy rumors. I bought in at 48 cents. Or no, I bought in at 52 cents, immediately tanked. I'm like, nope, screw this. I took the loss and I sold it at like 47 or 48. Luckily, I didn't hold out, but yeah, Fisker, they're
It's a train wreck.
Yes.
Just like Polestar.
Yeah, Polestar, like they have Geely, luckily enough, but I think Geely has even shown that they won't really like, because when Volvo initially announced saying that they're gonna like kind of take a step back, essentially, Geely didn't come up and put up their hand. They're like, they have no intention of. Polestar's a losing business, and yeah.
They have Zeekr going public now. The IPO is filed, so that one's far more intriguing to me than Polestar is at this point.
Yeah. Cool. John Russell brings up a good point. I've been actually monitoring that because initially it was supposed to be tail end of 2023, and now it got pushed to 2025. But when Lucid is going to be kind of moving into the UK, like I was kind of disappointed about that because I know there's a lot of good money there, like, but I guess I don't know. They probably have to configure everything, right? Because I know Lucids are fairly big, so they'd have to configure the whole body to change it, and maybe it's just too much work.
That's a good one. I haven't really thought about that. I actually don't even know what countries they're ultimately in right now. Obviously, they're in Germany, obviously in the Middle East there. Are they in South Korea yet? I know they were looking at that one as well.
Unofficially, I think we've seen some pictures, but no, I don't believe they've done a lot of hiring out there. I feel like that again could be another question to pose. But yeah.
I'll be right back. I'm sorry.
Yep, no, it's all good. So yeah, once Alex comes back, I think we'll pretty much wrap it up, unless anyone has any pressing questions. But I feel like it's just one of those things that we are yearning for more questions. How much does it cost to make that money in right-hand drive? I wish I had the right answer for that. Logically, I feel like it would just be, I don't know. I guess we can kind of look at Polestar as a good example, but it might be hard to find out exactly how much R&D. I don't know. Robert Lee, I think Lucid is trying to be luxury, and they clearly do not like to give negative pieces of news. So I think they finally learned. Maybe they're trying to say, hey, you know what? Less is maybe more. I think that's literally their mentality of what they're trying to do. Less is more, and yeah. Cal, how about Lucid charging stations? I don't think they're... I know Alex was on point when I had a chat with him yesterday. Alex, do you know much about like Lucid charging? Or is there going to be like... They just...
As far as I know, they've never indicated that they're doing a charging network. They do have some, kind of standalone chargers that they do, but I don't even know if you can actually buy those for home. I think that they just have those at Lucid centers. But yeah, they're not going to be like a Rivian or a Tesla and having their own charging network, to my knowledge.
Yeah.
Lucid, yeah, so...
Yeah, I don't think so.
They just do the home chargers. Yeah, I'm looking at their site right now. Just that.
Okay, so with all that fun stuff said, we had another fun quarterly earnings. Some positives, some negatives to take away. More questions that we can kind of speculate, I guess, going forward. So, Alex, appreciate you joining on. I'll definitely have future chats with you. Thanks everyone for joining. Don't forget to hit that thumbs up and subscribe. And if you are on Twitter, pop over to the EV guy for a lot of good information associated to a lot of EVs. And yeah, was there any final touches that you wanted to say, Alex?
No, thanks for having me, man. Always good to talk.
Cool. Okay, have a good night, everyone.
See you guys. Take care. Bye.